All right. Well, good morning, guys. Let's wait for, other folks to come in. And we're gonna go ahead and get started. I'm gonna I'm gonna have to keep renaming myself. Uh, Let me just rename myself. Welcome everyone. Hang on.
Good morning.
Hey, great to see you, Duro. Can you guys hear me? Awesome. Okay. All right, we have more people coming in. It's great.
Good morning.
Oh, good morning, Leslie.
How you doing?
Good. Good.
Good.
Better and better.
Good.
John is going to be joining us in a few minutes. But anyway, we're going to go ahead and get started. I would like to give the floor to the new ones that we have in the family to kind of introduce themselves, kind of also for you guys to introduce as well. So, what you guys are offering, which markets are you in, and kind of talk about your goals too. What have you been up to this week? The things that you have accomplished and all of those, and anything that you actually wanted to share, or any challenges you wanted to share. And since we got Leslie here, I'll let her do the first go, and then we'll do a popcorn. We'll pick choose another person, and then the next person chooses the next one.
Okay.
All right.
Fantastic.
All right.
Good morning, everybody. My name is Leslie Taylor. I'm a military spouse. We live in Maryland, and so we're fairly new investors. Our focus is multifamily, and I'm just learning as much as I can. Very glad to be a part of this community. And so my husband and I are really focused on, identifying properties specifically anywhere from 2 to 4 units initially. In terms of successes this week, I had the opportunity to do some more networking, and I also connected Johnny to a investor. Her focus is primarily independent living, and she just opened her second independent living home in Baltimore. And so she's also in the Air Force as well. I'm looking to potentially scale. And so I connected both she and Johnny. I also met with a new realtor this week. Her focus is in the Laurel and Frederick areas in Maryland. And so, in fact, last night she sent me a listing for 4 units, surprisingly, that came available in Laurel. So Faye, I know I'm going to reach out to you for some support potentially on the underwriting. So I was really surprised because it's very rare in this area, except if it's in the Baltimore area, that a multifamily becomes available. So I know I would probably have to move very quickly on this if we decide to pursue. And that's
Oh,
all I have. That's what I have for now.
That's awesome, Leslie. Oh, actually, guys, before you pick the next person, I would like to make the announcement too. So we're gonna be doing deal live review, and we're gonna need your help in terms of like determining what days of the week it would be great to do it. Some of the options we have would be in the morning, lunch, and then at night. So, to make sure that we get the most out of it, we want to get actual deals that you guys are working on right now to do a live review. We don't have to share like the actual address of it, just the numbers and everything. So, I'll reach out to you, Leslie, on that one. All right.
Okay, perfect.
All right. Let's go to the next one, Leslie.
So I'm not sure who wants to go next.
You can pick.
I'll go next. It's okay. Good morning, everyone. I am Bar Kelly. I am currently pretty much a newbie in this whole investing and real estate game. I do have a rental property. It is a single family in the South Carolina area. I do plan to expand my rental properties. I haven't reached multifamily like my sister Leslie there. You guys seem like you guys are doing the thing. But really, this for me coming on this chat is more so getting my ears adjusted to the language and learning what I can, especially as I prepare to move into another investment, whether it's a single family or whether it's multifamily. That I haven't decided yet, but I want to be in the room so I can hear from people who are experienced, so that way I can continue to learn and grow. I'll go with Darrell,
That's
since he's on
awesome.
camera. You can go next, dude. Thanks, everyone.
Thanks, Bar. I'll reach out to you. I'll message you so we can get into an alignment call and see how we can kind of, get you in a clear path of how you transition and things like that. It's free, don't worry.
All
I'll
right.
send you the link.
Thanks, Var. Appreciate it. Hey, good morning, everybody. I'm Darrell. Nice to meet you all. So I just joined the group recently through my good friend Darius. So I've joined up with Miss Faye and Johnny and kind of talked to them a few times. And my goal essentially is passive income. I'm currently active duty military. I'm in the Navy over here in Jacksonville, Florida, and hoping to get into some multifamily homes. Been jumping head first into all the real estate investing. So hopefully I can glean some information from all of you and learn a lot. So I'm excited to be here, and I wish all of you the best, and I hope we can all achieve success together.
That's a very humble introduction.
Thanks.
There's more on that, Darrell. But anyway, thank
Yeah,
you for sharing.
of course. Thank you.
We're gonna hear more of you, of course, in the upcoming weeks. But welcome. We are super excited to have you here. I know this is your first $1 million coffee chat, and you're just gonna love it. Okay, you
I
pick the
appreciate it.
next person. Welcome,
I'll
Darrell.
I'll pop popcorn Brian since he's also on camera.
All right, thanks, Darrell. Hi, I am not military, but I live in Colorado Springs, so it's kind of the next best thing, I guess. If you've ever been through here, there's what 5 or 6 military installations. So anyway, we love our veterans. Thanks y'all for your service. Um, I started in 2008 investing in real estate with my first fix and flip, which, if you remember, 2008 was a bad year for real estate. So um, our house sat on MLS for about 6 months. So we pivoted and turned it into a rental. That started my sort of my path on being a landlord and doing rentals. I currently have sort of evolved into multifamily, and more specifically within the last 2 years into self-storage. So my partners and I, actually from college, known each other for about 30 years, are investing in the so-called Texas Triangle. So the Dallas, Fort Worth, San Antonio, and Houston kind of corridors in medium to large size self-storage facilities, and currently are working on a deal. We're under contract and raising capital for that. So we're working as a syndication, and my main role in syndication is capital raiser.
Nice. All right. Are you in school yet, Brian?
Am I where?
In the school platform yet?
I am not. No.
Okay, I'll go ahead and post the link in the chat. So we'd love to see the details of the deal that you're currently working on as well, and see how we can help you share in our network too.
That'd
So
be
yeah,
wonderful. Yeah, thank you.
welcome.
So I get to choose the next person. Is it
Yep.
Joel or Joel? Joel?
I think
I
that's
just see a
his.
note taker. Yeah, maybe he's
Yeah.
wrong. Okay, I'm gonna go with Cordara.
Yes, Cordera Gilliard from same small town as Johnny. Been watching his movement for a long time. Been want to get in it myself. Create some passive income for my family and I. Stay in Hopewell, Virginia, right outside of Fort Gregg Adams, formerly known as Fort Lee. Might be back changed to Fort Lee soon. Not sure. But yeah, on my way to work right now. Want to punch this clock, you know. Um, really don't like doing that, but hey, I'm gonna do what I got to do. I feel like I'm real close, like in position to get my first multifamily property. Now, I already got a single family home for me and my family, so plan on, just I want to do some investing now, get some passive income coming. That's pretty much it about me. I'm like a fly on the wall right now. I do plan on
Mm.
getting into the REI class. Yep, that's had a bad couple months of work. Man, two of my cars broke down, a big truck broke down, so kind of use a lot of my savings to keep the family afloat. I'm back to working now though, so it won't be long. I'll be ready. I'll be in class.
100%. For sure, Cardora. Yep. I posted the link to on the chat box for you guys to check out to if you haven't created your account in school community yet. And Cordora, I would love to be on a one-on-one call with you to see on how we can help you out with the transition, things like that. While waiting for you to get ready, help you prepare for you to get ready. Okay.
Yeah.
All right.
Hey, Faye.
Yep.
Did you want to explain to some people may not know what school is? Do you want to just give a quick, brief summary of what school is?
Absolutely. So yeah, school is a platform like an online, So we could say it's a kind of like a social media, but more exclusive, where it's you can see classrooms and things like that. And actually, I think it's better to share it so you guys can see it. I'll
Thank
go
you.
ahead and yes, thanks, Leslie. That's a good one. So yeah. So this is the platform. So we got the community right here. You guys can see, the things that we are sharing and things like that. But more importantly, we have classrooms, that you guys can access to depending on your level. But of course, we'd love to sit down on an alignment call with you so we can help you with which one to start with. Okay. We do have different goals and things like that, and a lot of information that we can see. And of course, you guys know AI is really out there to help us out, but that's why we created the space to kind of filter out and make it to you guys's aligned to you guys's goals. So it's not all the information that you're going to get out there is applicable to your goal. I'll use an example for, let's say Brian is going for the storage, and raising capital for it. That will be different for what Durrell's next step would be, because they have two different goals. You know what I mean? So we're gonna kind of help you out on that. But all of the things that you guys, in terms of the foundational and then the accelerator and things like that, would be out right here. But I would say more importantly is the community, for you guys to get connected with the people that actually matters and would be contributing to your goals. So say, the people that are within your market or the market that you're targeting and things like that. And of course, the weekly touch points that we have right here. I hope that helps. Kind of went on a little riff in there, but okay.
Thank you, Faye. That was great. Thank you.
Thanks, Leslie. All right. I think Brian called Dr. Joe too loud and he jumped right in. Okay. Cordora, you want to pick the next one?
I haven't really been watching the stream, so I don't even know who's all on, to be honest with you.
Oh, Okay, we'll go with Dr. Joe, my favorite
Perfect.
doctor. Thanks, Dara.
Good morning.
Good
Thank you
morning,
all.
Dr. Joe.
I just tuned in. Sorry I'm late, but I assume it was sharing wins or something like that.
Yep, kind of introduction because we have the
Oh,
people that kind of joined. So you wanna, you
okay,
know,
sure, sure. Well, I'm Joel McLeod. I'm in Montgomery, Alabama, where I live and practice internal medicine. I celebrated my 34th anniversary yesterday, practicing in the office, and I'm on the downhill side now. Maybe have maybe 3 or 4 years left at the most, but I'm transitioning over to becoming a real estate investor. I joined Faye and Johnny. I guess it's been about 3 years now, and I've been studying real estate for years before, but never really taken action, gotten off the sidelines. But by being in their presence and being a part of the community, it sort of forces you to take massive action, and that's been the key to actually getting some properties and getting involved, developing some relationships with people in the community, and also getting motivated by, inspired by people in the community. So it's really important. And kudos for those of you that are new for being here. I think that's a very important step to be around like-minded people, to get insight as well as to develop business relationships with people. You shouldn't do this by yourself, particularly if you're going to something like multifamily or storage space. It's too big to tackle by yourself, and plus it's always easier when you got somebody that's been there, done that. So take advantage of the group. Take advantage to let people know who you are, what you are. Personally, I started out focusing on tax liens several years ago, flipped a few tax liens, and since then I've become a attracted to creative financing. So I right now focus on buying houses subject to the existing mortgage, where I take over interest rates that are still below 3%, try to around 3%. Most of mine have been foreclosures. I target pre-foreclosures. I partner with a local investor here in town, and we get foreclosure lists, and we contact people, and we make arrangements to help them get their problem fixed first, stop the foreclosure. We approach the banks and lenders and work out some arrangements. Most times we don't have to pay the arrears. A lot of these people are 20, 30, $40,000 in arrears, and we try to work out something with the bank where we can put those arrears on the back end of the note, or come up with some kind of buyer. And we found a niche of buyers that can come in and take care of the reinstatements, and then we transition the house over to them, either as a flip or a buy and hold for us, without being our partners. But it's worked out well. Most of our dispositions are done with creative financing as well. We rent to own most of our properties. Occasionally, we flip some to our buyers, as I said, and leave us in the middle, or we flip it and make a profit on it. But it's been good. But we really want to transition to multifamily, and I have reached out to a few people in the storage space. I'm interested in this storage space as well. So I started looking into that possibility as well. But yeah, that's who I am. And occasionally I have done some transactional lending. Here lately, I've sort of put most of my funds into my own projects, but I do want to resume that in the future. But that's me in a nutshell.
So I guess Dr. Joel, you would also want to connect with Brian right here too. All right. Well, oh Johnny, welcome, Johnny. I didn't notice. Hey Johnny.
Hey, good morning. Good morning.
Good morning.
Yeah, I've been here for a little bit. So I was running a little bit behind getting my rental car this morning to head down to actually en route to Montgomery and then to Panama City today. So
Mm.
full day, life of an investor.
What time you gonna be here, John?
I'll arrive about 8:45.
Okay.
I'm planning on meeting with Parker at the property at 9, and then we'll walk and talk and catch up about 30 minutes. And yeah, and then I got a meeting with the investor at 10:30 over at the Publix off of Vaughn Road. I met this guy a couple of weeks ago online, a former Wall Street guy that's local in Montgomery, that he actually owns an 18 unit that he's looking to put on the market. And we were talking about some mezzanine debt options and some things that we were working together on, potentially on the Eastbrook deal. We'll raise another 250,000 that I was going to bring in. And yeah, so we're going to connect that person for the first time at 10:30 over there. And then I'm going to hit the road to Panama City to check in on my townhome project and potentially bring in a new GC on that. So that's the reason, unfortunately, that I have to go down there. An extra 3 hours, well, 6 hours round trip back to Montgomery and coming back up to Birmingham. But it's worthwhile to meet with a couple of general contractors in person to kind of get things moving on that townhome remodel. So
Okay, maybe I'll meet you at the property around 9 and walk through with you.
yeah, most definitely, most definitely. And I need to I need to catch up with Sherelle. I didn't message Sherelle. But I'll give him a call if I hop off that and give him 45 minutes. I know he's probably on the clock or about, so if he's in, he may show up as well. But yeah, no, that's good. Welcome to all the new faces that's on. Usually, I have my coffee and I'm sitting stationary, but I'm on the move today. I won't say unfortunately, as I'm in Alabama all week, but no, you're in a great place. Great progress that's happening, and I would say the feedback to everyone is like take action. And I forgot the author's name, but it was a great video and I shared in the community. But the author was talking about how it's easier to go to 10x versus 2x and faster. And giving an example of someone that's trying to accomplish a goal in 10 years, your path to accomplish your goal in 10 years that you're giving yourself, that path, if you give yourself, say, only 2 years, that now that path to get to that destination is going to be a lot shorter in time. And it's going to save you a lot of time, as well as your approach to get there. Your approach is going to change. Whether it's ultimately your goal is, say, getting into multifamily, getting into self-storage, or getting into other commercial real estate, then maybe, wholesaling or fixing and flipping or doing those different things aren't going to lend itself to get you there in a short amount of time frame. Maybe now you're going to have to look at maybe an asymmetrical type of approach or a completely different approach to be able to accomplish your goal in a shorter amount of time and to get there. And, the thing that I have learned in real estate, that all it takes is one relationship that could change the trajectory of everything that you're doing. And that's just life in general. That, Grant Cardone says it all the time that, there's somebody that you don't know that has everything that you need, which is extremely true. I have countless examples of just being in different rooms, getting in different networks and communities where different things have come to bear, whether it's resources, partners, funding, opportunities, deals, you name it, that comes by just somebody that you didn't know, or even somebody that you don't even know. They know you through somebody else that has opportunity that can come your way. So I encourage you guys to get serious about your goals and don't make lazy goals. That if you're serious about, where you want to be 10 years from now or 5 years from now, it's like, okay, well, maybe what would it look like if you accomplished it in 2 years or only 3 years and 5 years? And to look at how you can take action and maybe stop delaying it and maybe change some of the approaches that you have in order to get there and what you perceive in your mind. But there may be some more expedited ways to get there that are going to save you a lot of time, because, a lot of what we get taught to us is go to school, you work 40 years till you're 65, and you save up, and then you live off 4% of your 401k on annual withdrawals from that and live off of it. But it's like, who says, what if you can retire at 45, 20 years from now? Like, okay, what would you do different? And how would that look? And how can you get there versus kind of taking, the slow approach that a lot of people, they advertise and push to us to go out here and work and do those things. But there's nothing to say that you can't work for your W-2 job and build your portfolio on the side where now you don't have to work 40 years, you don't have to work 20, 25, or you can position and transition out of your career into something that you love doing outside of whatever it is that you would do for free and that you can get paid to do. And so that's one of the things that just the conventional wisdom of we all that there's different ways and different approaches. And I'll tell you, like coming out of the military and always just kind of keeping a pulse, like the economy is changing. Like fundamentals are changing in regards to where we are right now in the United States and our pick where we are in the world order. For those that don't know, the US dollar has fallen in value over a little bit over 10%, which is the largest fall in the US dollar in over 50 years right now. And so one of the other things that is going in the backdrop, we have record amount of inflation right now. I think we're over 35 trillion. The big beautiful bill, which is great for investors and business owners, it's going to potentially, I think it was the OMB guys or GAO that was doing the assessment saying it's going to add $4 trillion to the deficit over the next decade, I think. So we got a lot of challenges, but the economy has changed. You look at artificial intelligence. You look at a lot of the old guard in regards to how school and education, like a lot of those things are changing on how we transact in the economy. And a lot of times the traditional approach that we go on, like we can't be using information from the 80s and 90s or even the 2000s to make decisions today because things have changed. And for as real estate investors, you can't approach real estate like it's 2015 or even 2020 because the market and the landscape has changed. And so that's one of the things that we have to continue to reinvent, continue to evolve ourselves to stay relevant, but also to make sure our strategies aren't stagnant, where we can continue to position ourselves for growth and success and looking at market cycles and understanding where, like, for instance, multifamily, commercial real estate, and where everything is at right now, positioning that this is a great time to get into multifamily, that you have quite a few people that are experiencing pain where they're overpaid for properties. Properties are starting to come in and be foreclosed on by banks. And this is really going to impact a lot of the C-class properties and some small B minus class properties, whereas that people overpaid and they're not able to achieve the market rent that they thought. Insurance taxes have gone up. And so now they're actually having to refinance in an ultra high real estate interest rate environment compared to where they were when they bought 2021, 22, when rates were extremely low. And so with the rate increasing, that means that your mortgage payment each month is going to go up. We know taxes, insurance is going up as well, which means less capital that they're going to be able to pull out of the property when they refinance. And that gives a lot of opportunity for us as investors to come in and buy some really good deals, that cash flow at rates today and buying it at the right price. And it allows you to position your portfolio, because all you need is one multifamily deal that could change the trajectory of everything that you're doing with it. So just you guys are in the right room, and you're at the right time to be able to build wealth. But the thing is, I'll challenge you is to look and see how you can collapse your goals into in achieving those in a shorter time frame. I know there's a lot. I'll turn it back over to you, Faye.
Yeah,
Because I didn't know that some of the other, I know Kadarius, I didn't see any of the other new people, if they had already introduced themselves.
we have 3 more, I think. But yeah, that's
Okay.
great. I will be sharing with you guys the video that Johnny is talking about. I was like on the 15th minute of it, and I already changed. It was like mind blowing. It changed like the things that I see, because usually we set goals. That's it. We set goals. We kind of figure out how we are gonna reverse engineer the steps and things like that. But it's just a little a different perspective when you're looking at that, because they combine science and philosophy and a little bit of faith in there too, which kind of makes sense. I'll let you watch it anyway. All right, I will say we'll go for Christine. Or Christine, you want to go?
Yeah.
You ready?
Good morning.
Okay. Good morning.
Good morning, everyone. A great chat as usual. I'm Christine, and I am in the Baltimore area, Baltimore, Maryland, and I also do Prince George's County, Maryland, and Washington, D.C. And I am by trade, I'm an accountant, and I am a licensed real estate agent. And right now, I'm looking for multi-families. Looking to add to my portfolio some multi-families. And yep, that's me.
Thanks, Christine. And before I forget, you guys, please drop your social media accounts, the way to contact you on the chat, so that we can, kind of go get all acquainted. I also dropped the school community and then the alignment call link for you guys to book in there. Christine, I know you have a YouTube channel, so go ahead and share it with them too, so we can kind of
Yeah.
help you as well.
Okay, thank you.
Thank you. All right, we'll go with Logan.
Hi guys, I'm Logan. I'm also in the Baltimore area, so I would love to connect with you, Christine. I am starting my wholesaling journey. I've been talking to a few cash buyers, so that's been really exciting. And I've been talking to title companies, so now I'm just really trying to get leads from motivated sellers who really need to sell their property. So yeah, looking at a lot of pre-foreclosure right now and gonna send out some calls today. I also got on a call with Joel this week, or this past Monday. It was great. And I don't think Kyle's in here, but he was also on that call. It was really informational, and I had a great time. Just getting to know them. Yeah.
Awesome. And if you have any opportunities that's under your belt or anything that you find, Logan, feel free to share it with us too, so we can see how we can also help you out.
Yeah, of course.
Awesome. Great to see you. Jay, you want to go next? Oh, is it Jay? Hey, Jay.
Yeah,
Can you
hi.
hear me? Oh, there you
Yeah,
go.
yeah, I can hear you. Sorry, I was away for a coffee for a bit. Yeah. I am currently working on a lien foreclosure list um, and subject to. So I am making calls to foreclosure list and doing some research on liens and deeds.
Nice. Which markets, Jay?
Um, for liens and deeds, I am looking at for deeds, I am looking at Texas, and for liens, I am looking at Florida.
Okay. Awesome.
And for foreclosure, I look at Texas.
I think Kyle, the one that we got last week, he is also he shared a lot of some insights on that in the Texas market.
Who
The
is that?
Kyle Wentworth. So I'll share in the community the link to the replay for our last week's $1,000,000 coffee chat, so you guys can rewatch it, and definitely get in touch with him too, so you guys can connect.
Okay, sure.
Okay. All right. So a couple of what do you call this? If for those that came in a little late, we're gonna be doing a live deal review in the upcoming weeks. So if you guys are working on any deals, actual deals that you want to have another set of eyes looked at, send it over to us, and then we're gonna do it. We're gonna break it down for you live with, of course, Johnny. And so yeah, Johnny, anything that you wanted to add? Updates?
Oh, no, that. I think that's the big one is the live update, the live deal review. I think that'll be something that'll be good, and I will open it up where if you're looking at a potential deal and just give you my initial feedback because and I really the goal is to get you guys comfortable with underwriting and going through and being able to ask questions and see other deals that people are doing. It may not be your deal, but just something that someone may have ran across and just kind of show you guys my philosophy or approach and how you can kind of streamline it based off the information that you have, because every deal is going to have different levels of information that'll be included with it, and just showing you how you can fill in gaps and how you can get to a rough estimate of what an offer would be, or whether or not it's even worth spending any more additional time on it, just to see where the pricing is and where it needs to be. And I'll encourage you that, a lot of times you're going to see deals that's in the market that's overpriced. And that's okay. And just being able to share with the agent or broker or seller what your price is, and then letting them know why your price is what it is, and understanding the math behind it, that, some people may not understand it, but they'll have to respect it. Like, you're not just coming up with a pie in the sky number, but you're an investor, and we're buying these properties because we're looking to make money and make our investors money at the end of the day. So it's not personal, but I think that'll give you guys kind of my approach and philosophy on some of the deals and how you can put a quick look together at those, and get a kind of immediate feedback. So I think just there's a lot of things happening uh, in regards to multifamily. I think a lot of people have been paralyzed by everything that was going on with the tariffs and the economy. A lot of uncertainty. There's still a lot of uncertainty. President Trump continues to just go at his own pace in regards to how he's approaching tariffs and how he's leveraging the tariffs to renegotiate trade deals. So that's still dynamic. The Iran conflict, that kind of sputtered out. Thankfully, there hasn't been a whole lot of continuation with that. That drove some uncertainty in the economy. And I think, as well as the big, beautiful bill, that's going to give a lot of certainty about the 100% bonus depreciation. We talked about that last week. So definitely check out that video. So I think a lot of people are more optimistic now than they have been at any point throughout 2025, which means things are going to start picking up with transactions. We'll see where the Federal Reserve, I think they're meeting here in a couple of days, and to see whether or not they're going to look at continuing to reduce the prime rate and cut rates, and what that will ultimately, it hasn't directly correlated to the 10-year Treasury note, which drives the mortgage rates. So we'll see how that works out on if we actually get some rate cuts here later in the year, and we see mortgage rates ultimately start to decline. Of course, that's something that we'll keep our eyes on. But the thing is that once these rates start being cut going into 2026, everybody's going to be back on the market. So now is the time to really get out here and hit the ground and start working deals, because everybody's going to be running back in once rates go sub 6%. Like, it's going to be, and there's not a lot of inventory being built. It's going to be crazy, just like it was in 2021, with a lot of competition, a lot of deals. So now's the time to really get good at your underwriting, start building those broker relationships, and then also start building up your direct to owner marketing as well too, to kind of generate those leads.
Yep, yep, I agree. I mean, 100%. And Brian actually just talked about the '08 situation, but it's not something that we can compare to right now, but kind of in a sense where those who swept in right before it gets up are the one who actually made a lot of profit. And that is where in the market cycle, I think that's where we are right now, that soft spot where, when you get in, it's going to make you.
Yeah, because I think you look back to 2022, that in certain markets, commercial real estate has dropped 20 to 30% from their highs back during that time frame. Not all markets are the same, of course, that's why real estate is local. We're looking at how much new inventory is online, but the areas like Austin and Dallas, they're seeing a lot of pain just because there's so much new inventory, and it's pulled rents down, where a lot of people bought these properties overpaid because they thought they were going to be able to achieve a certain number in rents. And now rents have dropped just because there's so much capacity available in the marketplace. And, their expenses have gone higher, and it just kind of created a bad situation, unfortunately, for a lot of people. And a lot of limited partners have lost. There's millions on top of millions of dollars that people have lost, investors have lost, that isn't being talked about right now in public spaces. But just talking with other syndicators, I was talking with the guy, and he was telling me that the 900 investors he has in his database, and even his own deals that he was a limited partner in, he hasn't got any. They're not getting any distributions. I've talked to a couple limited partners where their property they invested in that that they've been foreclosed on, and to the tune of they had raised over $20 million of equity, and the operators lost the property, and that $20 million of investor capital was completely gone now. And so the thing is, like, being able to underwrite these numbers, understand the deal, being conservative with all that goes into your longevity, and being able to get into deals. And unfortunately, some of these deals that, I was talking to the limited partner, and he's like, looking back on it, he went and walked the property. The guys had a great track record, but, it was unfortunate just where they were in the market cycle that they bought. Rates jumped up tremendously, their taxes and insurance went up, and it was just a completely bad situation. Unfortunately, that looking back in his due diligence, he still didn't think that there was anything necessarily that he would have done. He would have still done the deal with it, but it just came down to the actual timing and everything, how it's affected with this stuff. We don't have a crystal ball. Nobody back in 20 rates were going to shoot up as fast as they did. But that's why we do our due diligence and we go. But unfortunately, that pain is going to be opportunities here in the next couple of years, and more baby boomers who own properties are getting out the game. They're not being landlords. So all you need is one. All you need is one good deal, and you'll be squared away in doing that. So yeah, I think you're spot on with that. And, we got a lot of great things coming out, and I'm almost completely done with the Air Force. That continue to grow REIG and saying what we're going to be doing and bringing in different individuals from our network, different financial products as well. Now that I'm getting my securities license to be able to sell direct participation programs, so essentially oil and gas funds and commercial real estate funds, to be able to sell those to accredited investors for this financial firm. And so a lot of these new products we'll be able to bring in for accredited investors and opportunities to network and bring in more people into the community. So super excited, with where we're going and positioning for the future.
Yep, absolutely.
Anybody got any questions?
Thanks, Leslie. All right, I know Leslie had to jump off, but yeah, we'll open it with your questions, guys. And while you're thinking about it, I actually wanted to just check into anyone who would be in Atlanta next. Is it next week, Johnny? The Invest
No, it's
Fest?
next. Yeah, so it's next month. So it's
Oh, sorry,
August
next
20. August 23rd through the 24th. With Invest Fest, is being hosted by Earn Your Leisure, their podcast, and a couple other people. I know, like Magic Johnson, Steve Harvey are some of the key guest speakers. And they're going to be talking about a lot of different investment topics through real estate, stocks, entrepreneurship, and a lot of things. So it's a large crowd, a lot of different diverse speakers, and I haven't been before, but I've heard good things and some mixed reviews about it. So I think it'd be a good opportunity to kind of get out and see what it's about. It's a good networking and doing that. So yeah, I'll be there, and I just want to definitely put that out there. Just see if anybody else had interest. It'll be in Atlanta, and put the date out there, and we can look at maybe doing something as a group as well there.
Yep.
And I think we have and I'll be speaking at the Veterans and Real Estate Summit in Fort Worth, Texas. I think it's September 12th and 13th.
Yep. So not affiliated with InvestVest by any means, but if you guys are gonna be there, we're looking at going there as a group. So I'll drop it in the chat too, so you guys can check it out and message us if you're gonna be there. you can kind of hang out. And then, of course, the one that Johnny is going to be speaking to in Texas, I'll share it in the community too. What else? So yeah, the deal review, and then the ambassador program. We are looking at doing a session with the ambassadors that we have. I mean, the REI Genius ambassadors to kind of help you out with the branding too. So we'll kind of brainstorm. If you have any suggestions on what days it would be great for you guys to jump into a session with us, or and any schedule or time that you would suggest it would be best for us to work on. I want to put it out there because I heard and raising capital and things like that. And even if you're just starting at one point in time, you're going to be needing some leverage in terms of capital, right? It's not because of I'm just doing some duplex right now or just single family right now, but when you scale up, once you've done it, I tell you guys, it's addictive, right, Dr. Joe? It's gonna snowball to another deal and another one and another one. So um so yeah, we wanna help you guys on in terms of giving you a kick, help in terms of how are you gonna do your personal branding online. And I heard um if your business is not on the internet by 2025, you're not in business. So if you're like me, that's also shy with camera and also doesn't want to be out there on social media, I can totally relate to that. And I will be able to help you guys out on overcoming that too, and help you with what kind of contents do I put out in there, and in alignment to the lift that we're going to help you with the REI Genius Ambassador Program. So you know, send in your suggestions on what time and days that would work for you. Any challenges this week that you guys? Oh, I see Hannah joined in. Hey, Hannah, can you hear us?
Yes, I can hear you, and
There you go.
I have evolved my strategies a little bit. I'm combining midterm with a few other more profitable strategies. I would love to come on the call like I did a while ago, show my numbers, and I would love to share. And Maryland is a hot, hot market for my strategy, and other markets too, like Atlanta, North Carolina. So I would love to show you guys the numbers, show you the numbers about the markets, and yes, definitely work with you to make your rentals much more profitable, like I did.
Awesome. Yeah, absolutely. Let's go ahead and work on that too.
Thank
Um,
you.
Thanks, Hannah.
Thank you.
Brian, before we wrap things up, I wanted you to share a little bit of the about the deal that you mentioned earlier on the self storage, and also, would you mind sharing us a little bit about the market that you are too, if that's okay?
Yeah, of course. Yeah, thank you for the opportunity. So this is going to be our third self-storage acquisition in the Dallas-Fort Worth area.
Uh-huh.
It's been a very good, profitable market for us. It's a 403 unit facility. It's only about 6 years old, so still relatively new. It's an A class property, and it is a 506C. So we're looking for accredited investors. We are under contract. We are scheduled to close at the end of this month, but we might get an extension because there's been some issues going back with the bank and the underwriting and the seller. So there might be more time, to get in on the deal, but we are rapidly filling up the investor slots. Minimum investment is 100,000, but we can talk about it if we're going to come in at maybe as low as 50,000. But we're looking at an IRR, which is the internal rate of returns, at about 19%. And we are looking at an approximate 10% annualized return. We're not setting a preferred return or a pref on the deal because oftentimes the self-storage deals cash flow much better than that. So and it's hard to predict. But what we like about the property is that it's been an out-of-state owner, and they are divesting their properties outside of kind of the Midwest, so out of Wisconsin. And we're acquiring this property for about $20 below replacement value per square foot. So we're getting a tremendous price. And because they've been out of state, they are behind on raising rents to market rates. Market rate is about 16% below the current rates that they're charging. So this property is going to cash flow very well. There's no heavy lifting in terms of capital expenditure. We don't have to do much in terms of value add to the property. There's just a little bit of a drainage issue. What that allows us to do is just move in and execute our business plan, which is to just bring rates up to market rate gradually. We plan on doing 8% in the first 2 years to make up that 16%. And that's about it. So it's a really great opportunity. Since we've been under contract, we have underwritten about 300 other deals, and this one still stands out head and shoulders above the rest. So we're really excited about it.
Any questions, anyone? Oh, Hannah, thanks for sharing, Brian. Hannah, you have a question? I saw you raising it.
How do you find these deals? Can you give us some tips?
Well, it's once you get started, when you find your niche, you start just coming across these deals. So a lot of it is of course, hitting the proper channels, online and doing searches. But when you put the word out with brokers and others, then they can start to find deals for you as well. Our previous 2 deals, and getting back to kind of the situation, during COVID and whatnot, and things that Johnny had touched on, we started out in multifamily, but when money was cheap, so to speak, when interest rates were really low, everybody was in multifamily. It was kind of the buzzword, and everybody was trying to get a foothold and buying up all the deals that they could. That created a lot of competition for us. So my partners and I decided that we would pivot to something a little less competitive, which was self-storage. And as a result, just by poking around and showing interest, we were able to secure in our previous 2 deals seller finance opportunities, which streamlined the process for us, and we got very favorable interest rates that way. And based on that experience, we decided we're in the right niche at the right time, and started looking for better deals. And so that's how we came across this deal. It just sort of fell in our lap. It was off our radar, but somebody had mentioned, there's a large operator, this ownership, company has about 240 plus self-storage units across the country. And they just started looking around for potential buyers. Like I said, they felt that they got a little overextended and overreached kind of their boundaries a little bit and trying to manage all of these different properties across the country. So they started to pull back and divest, some of their farther flung properties, if you will. So really it's just it's like manifesting, right? Just putting the word out, letting people know what you're looking for, and then the deals start coming your way. It's like, I forget what it's called, but it's like the yellow VW, philosophy or phenomenon. You don't really see them until you buy your yellow VW Bug, and then suddenly you see them everywhere, right? So
Wonderful. When you say you put your word out, did you post on social media or you contacted realtors? It was a combination. How exactly would you say you put your word out? I am looking for a laundromat business, but I don't even know where to start. I contacted a couple of people on LoopNet, so I don't know how to put the word out. I would appreciate, or is that another class by itself?
start talking to brokers. They're going to be your best
Perfect.
inside information, because they've got their ear to the ground, so to speak, and they're going to be connected with other brokers. And so on the ground level, it's really just kind of a word of mouth deal. And if you're working with a broker or different brokers in particular, and they know what you're looking for, your buy box, if you will, even if it's just like one niche, like you're just looking for laundromats, but it has to meet like a certain size or in a certain area. Once they understand what you're looking for, then if you're top of mind with them, then they will let you know. And it's sort of the out of pocket kind of a relationship as well, because if you're going to LoopNet, you're looking at things that are already on the market. And there's going to be competition, or if somebody stays on the market a long time on something like LoopNet, then others have already looked at it and it might not be such a great deal if it hasn't been snapped up already. So if you've got a great relationship with a broker and they can relay the information, with the seller before it even gets to market, then those are where the real great deals can be found. And that's frankly how we found those two seller finance deals. So it's just developing the relationship, talking to people. Of course, you want to check all of the available social media, online kinds of channels as well to see what's out there. But that's how you get to know the brokers. So you start calling and following up on those deals and talking to the people that are the contacts. And then through building those relationships, they know what you're looking for and pass information on to you before it gets to be kind of public knowledge.
That is wonderful. I am so grateful that you shared all this. Thank you so much. So these agents, did you find them on LoopNet, or you just went and looked online, commercial realtors, and you just started calling them?
It's calling them. It's developing those relationships. It's even calling up property owners before they even know that they want to sell. Sometimes
Yeah.
it's reaching out and letting them know that you're interested. Then that puts the bug in their ear. And Johnny mentioned also baby boomers. They might not necessarily be thinking about selling right away, but they know it's in the back of their mind. They don't want to do this forever, or they want to, enjoy their golden years, so to speak. But if you put the bug in their ear and say, hey, if you're ever interested, I'd love to talk with you. Then they start to think, well, I've got an interested party. Maybe now is the time. And so it's developing those relationships. Some of it is kind of that cold calling. But then, like I said, once you pick your niche and you start to investigate and put the word out, then, it's just kind of that phenomenon. All of a sudden, there's all of these different opportunities that you didn't necessarily see before. They were there, but you weren't focused on it, and other people didn't know that that's what you were focused on.
I have a
Yeah.
question. If Hannah's done.
I'm waiting for
Yeah,
Hannah.
go
Okay,
ahead, Joel.
Hannah must be done. Yeah,
Okay.
Brian, you
Yes,
mentioned
I'm
on your
done.
first
Thank you, Hannah.
two deals that those were seller finance deals. So I assume you're getting financing on this 500 unit deal. Number one, what kind of financing structure you guys have for this one? And also, what's your long-term plan with this one?
So this is a 3 to 5 year hold. We plan on selling. And we expect our equity multiplier to be in the neighborhood of between 2.2 to 2.4 times. So it's a great opportunity for our investors. It's going to pay out over time with monthly distributions and then a payout at the end. Our debt that we're looking at, we're looking at getting under 7%. With I think the first 2 years interest only, and then to sell at the end. But we will have the opportunity for an extension on the loan. So one of the things, hindsight's 2020, right? So lessons were learned during the housing bubble in 2008, and a lot of money was made. For us, having gotten started really sort of during COVID, we have positioned ourselves now with our debt to not make those mistakes that others did. So when we do our underwriting, we are really conservative and have contingencies, the sort of what if, worst case scenario kind of things. Will we be able to withstand some of the things that we saw happen in 21 and 22 and 23, when a lot of those adjustable rate mortgages matured, and then people got caught with what was historic interest rate increases. So really no one could see that coming. And it was really unfortunate, of course. A lot of people did lose a lot of money in that chaos. But for us, we learn from those lessons. And so we look at deals that pencil out with interest rates as high as they are, and then work it even, in a worst case scenario. But if things work out the way they're being promised and interest rates start to come down, and we've got the bonus depreciation and cost segregation and those tools that are available to us, then if we're able to refinance, in years 2 or 3, then of course we're sitting much prettier for those final years for 3 and 4. But we expect our cash on cash to be about 9.8% throughout this investment. So it's a really solid deal, and we're taking everything into consideration, having that perspective in recent history, and what other investors unfortunately had to go through with those adjustable rate mortgages.
So you said this deal is sweeter than your 2 seller finance deals, and that's I guess that's due to the entry price that you're getting in with the under market rents that made it better than a seller finance deal.
Well, yeah. So it's 6 and 1/2 dozen of the other. I mean, our seller finance deals were great deals because we got interest rates below the going rates, and we were able to negotiate, interest only for the first 5 years. So those were really great deals in that sense. However, there was more involved with the value add. We had heavier lifts to get the properties up to cleaned up and get them to where they look nice and up to our standards. This property is already there. It's a beautiful property, fully paved. There are no climate controlled units, so it's all drive up, but there's room to grow. There's still land to develop if we choose to, either with covered parking or regular parking, like RV, boat parking, and that sort of thing. But in terms of, capital expenditure to fix up the property, there's really not any of that involved. There's about a $75,000 drainage issue on one side of the property. But other than that, and even that's minimal, we're considering, putting that off, even with all of the rains that we've had the last few weeks in the Dallas-Fort Worth area. the mitigation that's been done in the meantime while we've been under contract it seems to be holding up well. So so anyway, that's where we're at. So it's a little bit different, you know, higher interest rate with this deal, but we don't have to do much to execute our business plan. We don't have any, you know, big expenditures.
Okay. Thank you.
Good question. Yeah, thank you.
Yeah, that's awesome. Thanks, Brian. Great questions, Dr. Joe. Johnny, I know we're already on top of the hour, but
Yeah, no, Dr. Joe was going to ask the same question I was asking. I was curious about the capital stack with the deal, but no, definitely thank you for sharing that. That was awesome. No, it's been a
Yeah.
great session. I'm
Real
happy,
quick,
yeah. Oh, go
we're
ahead.
doing an 80-20 split for our investors, and there's no other waterfall. It's a true 80-20 split with no caps on it. So we want our investors to you know, come out on top on this. And so our structure in this deal is very simple.
Okay, awesome. Yeah, thanks for clarifying that. That's a big deal.
yeah,
Is that 80% to the investors?
I think.
Yes. Yes, it is.
Wow. All right. You know, Brian, have you dropped your contact information in the chat yet?
I did, my email and
Oh,
my cell phone number. So yeah, if you want to text
awesome.
me or just give me a call, reach out. If I don't answer, of course, leave a message, please, because sometimes I don't answer if I don't recognize the number.
All right. For sure. All right. Well, thank you so much, everyone. I know, you know, we went on overtime again, but thanks everyone for sharing, for showing up, for being here. There's just so much about, you know, about being surrounded by like-minded individuals, being able to share this journey with everyone. So yeah, so many exciting things that that's going to be upcoming on the upcoming weeks, and we'll stay on the loop. In school, we'll get you guys updated on the final dates of the deal review and things
Okay.
like that. On the meetups and
I'm gonna
everything. And
forgot about
Brian
my
will
app.
the what, Johnny?
Ignore me.
Oh,
I'm sorry.
and Brian will look forward to seeing you in school or share the details of, you know, this opportunity with us. I would love to meet you, and I was thinking of actually connecting you on one of the people that we have. I have someone in mind that I can connect you over to. But anyway, thank you so much, everyone. We'll see you again next Wednesday. All right, you have a great day, everyone.
Thank you.
Thanks, guys.